us live?
You are live. Welcome, 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 everyone. Join in. Thank you for those who are registered for the new home for the holidays. We're so excited to have you here. We'll just give it a couple of minutes for everyone to tune in. We're so excited. We have the Queens of Credit. We have the guaranteed rate, Mr. Clifton Saunders, on board. And of course, Vanessa's the beautiful team leader of the Platinum Experience Group. So we are so excited for this event today. Thank you guys for joining in and tuning in. And we hope that you take away a lot of great nuggets and a wealth of information from the information being provided for you today. Right.
Thank you so much for your patience. We had a little delay, a little technical difficulties getting on today, but we're here and we are ready to share some very valuable information for you, with you. So as Tasha mentioned, we're very excited to share the new home for the holidays information with you because let's face it, who wouldn't want to be in a new home just in time for the holidays? And the market that we have right now is definitely conducive for making that possible and making it happen. And that's what we do here at the Platinum Experience. We make home ownership happen, and we would love to do the same for you. But you know, nothing happens without a team. That's why we have our partners on here. And these are not just, you know, these are not your average business partners. Let me just say that and throw out that disclaimer while we're waiting for some of you guys to join us. You know, the Queens of Credit, tons of experience in terms of helping you to improve your credit score, even if it's okay already. You know, we're trying to take you from good to great so you can get, I'm about to start rhyming, a guaranteed rate. Look. But no, we're going to go ahead and get started. Tasha, if you can just give us an overview of our agenda of the things that we're going to cover today.
Yes, so we have a lot in store for you guys today. So briefly, we're going to go over the market of the moment. We're going to touch 6 reasons to buy now. We'll touch the credit score tips and resources. We'll go over the purchase process, the home buyer journey. We'll go over key factors to consider. And of course, financing, the loan process, all the needs to know regarding financing, your types of loan, general approval guidelines, how we're navigating the market post-COVID-19, down payment assistance, and we will have a Q&A section at the end. So if you have any questions, please feel free to enter those into the chat, and we will touch those at the end. And of course, taking action, scheduling a consultation. If you feel like this is your time now, give us a call, call any one of us on the team, and we'll be happy to schedule a consultation with you.
Thank you so much, Tasha. So just to give you a little bit of background about our team here at the Platinum Experience Group, we're actually a top producing team within the Keller Williams family, one of the largest real estate franchises in the world. We have over 13 years of experience in the real estate industry, also a certified credit smart instructor. So, you know, we can help you, you know, from A to Z as it relates to home ownership. Also, we have over 10 specialized real estate designations, including, I just got my broker's license yesterday, so I am officially a broker now. Thank you guys. In addition to that, we specialize with veterans, with buyers, with sellers, with luxury homes, and more so than anything, certified negotiation experts, because that's really what it comes down to when you're negotiating the contract and the terms and the things of that nature. So our motto here is just really integrity, experience, and results, because we know that's what you're looking for when you're looking to hire an agent. So that just gives you a little information about us, and we would love to earn your business and to be able to assist you with your home ownership journey. And we have the lovely, lovely Queens of Credit with us today, Dr. Ashanti and Ms. Shaniqua Nicole. You guys can introduce yourselves.
Absolutely, guys. We are so excited to be here. We are board certified credit consultants, definitely experiencing in coaching you to your way of excellent credit, global humanitarian. We've been featured on Fox, CBS, NBC, and magazines and radio. So we're definitely excited to be here.
Yes, thank you for having us, Vanessa and Tasha. It is such an honor, and everything else she said.
Thank you, ladies, so much. We appreciate you. And of course, we would not leave out our phenomenal mortgage lender. Look, when I was looking at this page, Cliff, I was like, he's just an all-star, just all the way around. But let the people know a little bit more about you.
All right, my name is Clifton Saunders. I'm the branch manager with Guaranteed Rate. I'm a senior loan officer here. I've been doing mortgages for over 15 years. Now in my career, I've helped over 3,000 families acquire home ownership, and I've helped many others through my team and the other loan officers that I train, and got them started in the business. And I've been a top producer for many years. Like I said, we help a lot of families, and the keys to my success is because we care. We love helping our buyers, and we specialize in a lot of different first-time buyer programs and just everything under the sun. If you're trying to buy a house residential, we're here to help, and we love helping our buyers. And so we do what it takes to get you into a home. We're not just loan officers; we're advisors. We're your friend, and we're going to get the deal done. So that's what we do best.
And that's definitely the type of lender you want on your side. Did you hear him say he's going to get the deal done? That's what matters at the end of the day, that we make it to the closing table. So thank you so much, Cliff.
My pleasure.
All right. So really briefly, Tasha's just going to give us a quick update on the market of the moment in terms of the Houston real estate market.
Yes. So for those of you interested in buying and want to know how the market is doing right now, well, the market is amazing right now. We are in a heavy sellers market where the demand is high and inventory is low. We have seen some price increases. So for the Houston market recently, our median price is $270,000, and our average price point right now is $334,000. Our average days on the market are 19, but there are some houses that are not even lasting that long. That's how much fast this market is moving today. Our months of inventory is 2.8. So that means our demand is high and our inventory is low, but our builder confidence is really high. There is a 20-year record high where we had 1.1 trillion loan applications in quarter two alone. That's amazing. So we are definitely still helping those of you purchase your homes and getting you those new homes for the holidays. Interest rates are still a 50-year low. It's a perfect time to buy. So just wanted to give you a couple of numbers there for you. For those of you who are on the fence or wondering, should I be buying now? Absolutely. Now let's talk about the 6 reasons to buy now. Number 1, low interest rates. As I mentioned before, interest rates are at a 50-year low. So what does that mean? When your interest rates are low, that means you have a lower payment for your monthly mortgage, which is giving you more savings for you on that overall monthly mortgage. You also have home appreciation. Your average annual appreciation rate is 3.5% right now. And let's talk about building equity. Each month that you're paying your mortgage, you're building equity in your home. So what does that look like for you? So for example, if you're buying a house for $150,000, that's worth $200,000. That's $50,000 right there in equity for you. So that's great opportunity for you to not only build wealth, building your equity and appreciation yearly, and also tax savings, reducing your tax liability every year when you're doing your deductions for your house mortgage. Home ownership matters. Now, this is a huge stat. I think you guys need to pay attention to this. The average net worth of a homeowner, $232,000. Average net worth of a renter, $5,200. So stop renting and buying. You know that you are in that position. Let's increase your net worth. Let's increase your wealth. Let's get you into that home that you deserve for you and your family. We can do. You see the people holding those keys. Let's get you those keys. And the process. Okay, so let's talk about this journey. What does it look like? I'm ready to buy a house. I know that I can. I know I'm in a position. What does that look like? Well, let's break this down for you. First thing you want to do is meet with a realtor. Hire a realtor, have the consultation. Let's go over your needs and wants and see where you are and see us create your action plan for you. The next thing we're going to do is we're going to get you pre-approved and match with a lender like Mr. Cliff Saunders here, Guaranteed Rate, and applying for your home loan and matching you with the right loan for you. That will determine your purchasing power and your price point so that we can start your home search. Once you're pre-approved and we're starting your home search, we're going looking for your homes. Once we found the home, you say, Tasha, this is the house. This is the one. I want it. Let's go. We'll put in an offer. Now, there's three things that's going to happen. You got either offer will be accepted, rejected, or countered. But we're going to make sure we negotiate and ensure that that offer is accepted for you. Then once you get your house offer accepted, you go under contract. Now, of course, when you go under contract, you do have an option period there that will negotiate for you, where you'll have some time to do your inspections and make sure that you're comfortable with this purchase. And if for whatever reason, if we need to pull out, we can do so. We'll do your due diligence. We'll make sure your surveys are ordered, your appraisals is ordered, anything that you may need, whether it's a home inspector, whether you need help with insurance or home warranty. We have a plethora of vendors that we'll be working with and partner resources for you and making sure that you have everything you need throughout the entire step of the process. The lender will be doing their due diligence as well, making sure that everything is going well with your loan, your process of your loan, and getting you that clear to close at the end. So you'll have a pre-approval and then you'll have a final approval. And you'll be working hand in hand with the underwriting department and make sure that all conditions are clear so you'll get your clear to close and get the keys. Now, of course, there are a lot of more details along the way, but we'll be happy to schedule that one-on-one consultation with you and we can discuss all the details and getting you there from the start to the end. Next slide.
Absolutely. So a lot of times people wonder when they're looking to purchase a home, how much money do they need in terms of the down payment and the closing costs? So just a general guideline here in terms of the down payment and closing costs, just the recommended savings to get started is between 6 and 8% of the total sales price. Now, this number could be lower if you're receiving down payment assistance. We've had some clients who have used down payment assistance and actually brought little to no money to closing. Now, we're not saying that's the case for everyone because every situation is different. However, we do want you to know that that is possible provided you qualify for that particular type of loan. In addition, the out-of-pocket expenses, this is before you even get to the closing table. Before you get to the closing table, there's some things that you're going to pay for. And some of those upfront expenses include your earnest money, which is generally 1% of the sales price, your inspection. The price of it can vary. However, an average is about $450 that you want to plan for. And then the appraisal fee is roughly about $575, $600. So this is money you already want to have reserved and available to you so that you can prepare to purchase the home. And then key considerations, right? I know everyone gets excited when it's time to purchase a home. It's like, yes, let me go to the model home. No, let's not do that. Let's start with a plan, right? And then you have to consider, because this is a huge commitment that you're making, what's important to you. So some of the key considerations that you want to keep in mind is, what are the market conditions right now? Is it a buyer's market? Is it a seller's market? What are the rates looking like right now? I can tell you now, it's definitely a seller's market. However, the interest rates are so historically low. This is an amazing time to buy a house. I mean, this basically increases your purchasing power because you're going to qualify for such a low rate. So this is an excellent time right now for you to either become a homeowner, or even if you're looking to move up to purchase your dream home, it's an excellent time to do that. But you also want to consider the total cost of ownership, right? In terms of that location. How close is it to the places that you frequent, whether it be, your job or your church or your family, your support system overall. Also looking at the schools, if you have children, are these schools going to be a good fit for your kids? Also looking at the tax rate, because the tax rate is going to affect your property taxes and that will affect your monthly payment. So you want to look at what's the tax rate for the particular area that you're interested in moving into, as well as the homeowners association dues. Now, every neighborhood does not have an HOA, but throughout Houston, most of them do. So you kind of want to prepare for that up front and be aware of what that cost looks like, because I've seen it range from anywhere from about $300 to about $2,500 per year. So that's just something you want to keep in mind, because that's factored into your total cost of ownership. And again, your commute, how convenient is this home going to be to your work, your family, and just your social support system and things of that nature, so that you can make sure that this is going to be a good fit for you. This just goes over some of our results in terms of our clients. This is our office, Keller Williams Professionals, out in Spring, Texas. Again, our focus is integrity, experience, and results. Results we know is what matters to you. So we decided to add this section in here so that we could share with you what we're able to do for our clients. Average closing costs on average could be more or less. Our clients are getting about $5,200 towards their closing costs. Those are seller paid closing costs. And then client satisfaction rating about 4.99 out of 5, and that's over 13 years, you guys. So this is not an overnight. Oh, we just happen to have 13 people watching now. I just saw that number. But yeah, so this is not something that just happens to happen overnight. And our sales to list price, it's actually at 96%. So my apologies, I should have updated that. So we're typically able to save the clients about 3% of the asking price. So what that means for you, kind of going back to Tasha's slide, is instant equity for you. Instant equity. So you're automatically building wealth as soon as you purchase this property. Representation matters. Tasha, share a little bit about that with us.
Well, let's talk about the why. 89% of buyers are using a realtor to buy a home. So those are some statistics for you. 52% of the buyers' primary reason for hiring an agent is to help them find the right home. Not only help them find the right home, and also negotiate those terms for you. 5% of buyers purchase a home directly through a builder or the builder's agent, the new home community. So it's only 5%. So this shows there is a need there. 89% of buyers using a realtor to buy a home, because it's so important. We're here, it's our fiduciary duty to represent you along the entire transaction. So a lot of benefits for you in using a realtor in your purchase. Bye.
Absolutely, absolutely. And keep in mind, even when you're going to the new home builder, the salesperson at the builder, they actually represent the builder, represent the seller. So you want to make sure that you have someone there that represents you in that transaction. And that's where the Platinum Experience Group or whatever realtor you decide to work with comes into place, because they're going to be your advocate, to be there to negotiate on your behalf to make sure you're getting the best rate and terms and incentives. Why hire a realtor? Tasha, if you could tell us a little bit about that.
We touched on the first bullet, fiduciary. It's our fiduciary duty to represent you. Your needs go above ours. Bottom line, number one. Number two, contract negotiation. So this is the biggest purchase that you'll be making, one of the biggest assets that you'll be buying. So we definitely want to make sure that you understand the terms of the contract and make sure that they are most beneficial to you. As Vanessa has mentioned before, even working to the new home, the new home consultant is representing the seller or that builder. Market knowledge and experience, staying on top of the market, making sure that we let you know how the market is doing so that we can best come up with the best strategies for you when purchasing a home. Just having the experience and going over your obstacles and pitfalls and just being careful to bulletproof that for you so it can be as seamless as possible. Doing our research and data analytics and making sure that we do the comps and make sure that the price is right, the numbers make sense for you, and that we're making sure that we're keeping your budget in line. Having a lender network program, like, guaranteed rate there, or a lot of our allied partners there with our lenders with Queens of Credit. We have just so many resources there for you, whatever you may need, be able to provide those professional recommendations for you. Again, no matter what it is, what it can be, and just coordinating the transaction for you. So you never have to ask, what's next? What do I need to do? Where am I? Communication is always there with you, educating, guiding, and navigating you. So again, for our first-time home buyers, or even our move-up buyers, or if it's your first time, or your second or third time, you have someone there committed to you and the process. So just a lot of great benefits of having a realtor specifically for you, because like I said, we're here for you, and you need to have someone in your corner. And a couple of common buyer mistakes would be, not hiring a real estate agent professional to make sure that you're covered. 2, using Credit Karma to monitor your credit score. So we do not want you to use Credit Karma. That is your Vantage score. We need you to know your mortgage FICO score. Those are the scores that the mortgage lenders are pulling and using their middle score specifically. So what is your mortgage FICO score, your middle mortgage FICO score? And there's a couple of tools and resources that we'll share with you at the end where you can go to check. Home shopping before your loan pre-approval. We do not want you to do it, especially in today's market, because they're either flying off the market as soon as they hit. So we want to make sure that you're prepared, that you have your pre-approval in place. So as soon as you find the home, we have the price point in place that you can move on it immediately. So not buying a home at the top of your budget. Make sure that we keep that in mind. We definitely don't want you stretched too thin. We definitely want you to not only get the house that you love, but we also want to make sure that it's in your affordable budget that you want. And not skipping the home inspection. That's so important. Whether though it's not required, it's so recommended. Again, it's a huge purchase. We want to make sure that the house is in good standing and you're not going into something that could be a heavy expense after you sign the dotted line. Make sure you be careful of those active disputes. That's another big no-no. Make sure if you need help, speak to a credit repair specialist, get a partner, do all of that before you start your process, because that can hurt your loan as we go into your transaction. Those are just a couple of common mistakes. If you have any questions, please put them in the chat. We'll feel free to answer any questions that you have throughout the way. And I'm going to be kicking it off to the Queens of Credit.
What's up, everyone? Yes. Let's talk about a little bit about credit. We can skip over who we are. We want to give the people the information that they need to get their home in the next 6 months. Okay, talking about credit. When you go and purchase a home, one of the things you want is a low interest rate. So if you are in the 700 club, 750, you will be able to purchase a home with lower interest rate. We want you to be able to purchase a home that gives you the lower interest rate. You save money, purchasing power. So with higher credit, you have purchasing power. We all didn't start out in the 700s. It's a process. Some of us started out in the 400s. But I'm in that 700 club now, almost in the 800s. So it is a process. And I want you all to understand, once you get there, you have purchasing power. I can walk in certain places and they pull up my credit and all I have to do is sign a piece of paper. But we're going to talk about that in a little bit. Also, employment opportunity. When it comes to being employed at certain jobs, you do have to have great credit. If you go into a bank and you're looking to work at that bank, the first thing they're going to do is check your credit. Because why? Sometimes people look at credit as your character, even though we understand that is not always the case. We've been put in situations where our credit, we were not taught about credit, so we just misused it. But now that you are with the Queens of Credit, we're going to get you where you need to be. When it goes for employment, you can walk in and they look and it's like, oh, your character speaks highly of yourself because your credit is good. Also, lower down payments. Tasha was just speaking about it. When you go to purchase a home, you want a lower down payment, as low as possible, because we want to make sure our house is inside fancy and all this and that, so you can save that money to purchase, furniture. So with a lower down payment, how you get that? Let's get that credit score up to a 700. And then you also get opportunities to leverage your credit. Real estate is a really, really great market right now. If you have great credit, to use your credit to get into real estate so you can start purchasing home, flipping home. That's a whole nother subject that we can be on for a couple of days about that. But it's a great opportunity. And then refinancing. If you're wanting to refinance your car, refinance your house, you need to have a certain credit score to refinance so you can get the lower interest rate. And across board, when you also have a higher credit score, your premiums are not little, but they're lower, right? You can go and ask them to recheck your credit so you can lower your monthly bills. So that's what we are about. We're about helping you to get your credit where you need it to be so you can get lower interest rates.
Listen, so Shaniqua just gave y'all the game on why credit is important, okay? You can leverage it and it is going to impact you greatly. Let's talk about how your credit score is broken down. The average credit score is 350 to 850. Where do they get those numbers from? So if you're looking at this, and I hope you're taking notes, okay? If you're looking at the largest one, which is 35%, that is your payment history. So that means anytime that you make one late payment on your car note, if you already have a mortgage and you're getting ready to buy a new home, if you have credit cards, both secured and unsecured loans and things, anything that's being reported to your credit report, if you miss one late payment, your score will drop 35%. So what does that mean, right? Missing one late payment could cost you up to 120 points. That's not the type of sacrifice that you should be willing to make. However, it also works on your behalf. So if you begin to make your payments on time, and let's say you had great payment history over the last 24 months, you actually get credit for that. Let's move on to the next one, which is 30%. If you look at the chart, it says amounts owed. So what that means is your utilization. So on those credit cards or those secured credit cards or unsecured, right? Let's say your limit is $1,000. Now, of course, 30% is pushing it, but 18 to 20% is extremely safe and it is very disciplined. So you want to stay under 300 or under $250 on a credit card that has a limit of 1,000. And Cliff is on here, so he's probably going to say you need to stay at like 180, okay? Because he wants to make sure that the underwriter pushes it through. And anytime that you go over that utilization, that 30%, that will actually cause your score to go down. So for some of you who have actually been through credit repair in the past, or you're working on your credit yourself, and you've said, I'm making my payments on time, stuff is getting deleted, but why is my score still dropping? Typically, it is because you are going over the utilization, over that 30%. So it is so important that you make sure that you stay anywhere between 18 to 20%. The next thing is 15%. That's length of history, okay? So your length of history, let's say that you have a card that you no longer use. And I don't care if you have a $5 or $10 balance. When you are getting ready to purchase a home, do not close that account. It is imperative that you do not close that account because you will drop your score 15%. And you need all of those points to get that 700-800 score so you can get the house of your dreams, even if you have to spend $5 to $10 a month on it. And another thing is if you don't use that card, sometimes companies will close it because you don't use it. And that could be 60 days of no use, 90 days. It just really depends on that company. So you want to make sure that if you have a card, unsecured or secured credit card, that you're actually using it. This also applies if you pay a car off. It is great to pay cars off, but you can be penalized, meaning your score will drop because it's a closed account. Next is new credit, 10%. So anytime that you are applying for credit, anytime you let the car dealerships bring your credit, the credit cards, the banks, it's going to drop your score 10%. So you have to be extremely careful and know that you really want this, what you are applying for, and better yet, will you get approved for it? So if you have a credit monitoring like Identity IQ or Credit Check Total or Experian, sometimes it's okay and it's better for you to let them look to see where your score is before you even apply. So that way you don't waste those precious points on applying and getting denied. Lastly, case mix, 10%. Now, there's a difference between installment and revolving. So your installment credit would be something like that doesn't change. So like, let's say your car note, you're paying that every month, $400 a month. It does not change. Now, revolving credit, that's your credit card debt. You pay based on what you borrow. So let's say if you charge your card, you may max it out. Hopefully you don't, okay? Because I see Cliff, I see the way he's looking. Don't max your card out. But if you do, that premium or what you're gonna have to pay, it's gonna be different. And so it's not going to be a fixed amount. However, it is a great thing to have a credit mix. So you want installment and revolving because it paints a wonderful picture to the lender who's looking at your credit, because they're looking to see, are you responsible? Are you going to make your payments on time? Are you maxing your cards out? If we lend you this money, are you going to walk away and not pay anything? Remember, your credit report is definitely, it tells a story. Next slide.
Okay, let's talk about some key consideration when it comes to your credit. I think Shanti went over the closing unused accounts. You absolutely do not want to close them. You want to use them. Of course, if you don't, there are some companies, depending on their what they have in place, that if you don't use it in a certain amount of time, they will close it. But you want to make sure that you're using those accounts. Trade lines are very, very helpful in boosting your credit score. Whether you have primaries or someone you puts you on as an authorized user. Now you want to be aware that when you are as an authorized user, maybe on your husband's card, make sure he's paying that card on time because it will affect everything with your credit according to that card. Co-signing, do not co-sign for anybody. I'm just gonna put that out there. Don't co-sign for anyone because a person will promise you something, and we never know what happens down the road. So you don't want to co-sign for anyone because it's going to affect your credit, right? Especially if you're looking to purchase a home. We need to stay on task and make sure you're putting exercising everything that we all tell you to do to get this home. Revalidation of debts. So we tell our clients that, hey, do not answer the phone by your name. If I call you and I say, hey, Vanessa James, how you doing? That could be a debt collector just looking to get you to identify yourself so they can put back that same debt that we got deleted back onto your credit. So make sure that you are not validating yourself over the phone. Also, change your voicemail to Office of Shaniqua Nicole, right? I don't need you to know this is my personal number. I can always change that to Office of. Independent debt. Now, this is for all my couples out there. Husband and wife, they think that just because it fell off of one spouse is going to fall off the other. And yes, it is possible, but you are two separate accounts. The credit bureaus look at you as number such and such and as number such and such, and just because it was deleted off of your husband does not necessarily mean it's going to be deleted directly because it was deleted for you. It's going to be deleted for him at the same time. Increase in credit limit. Now, this is something if you are having an issue with going over your utilization, if you have that room to call them and ask that company, hey, can I increase my debt? Or not my debt, I'm sorry, increase my limit. Yes, increase your limit, but do not start spending more just because your credit was increased. We're wanting to keep that utilization rate low, right? That consolidation, guys, you can do this yourself. It is no reason that you call, second, third party companies. They're going to charge you this heavy fee, and then you are stuck paying this bill, which 9 out of 10, a lot of people get in debt consolidation programs and they can't finish it, and then they're looking to us to help them out of this process. Now, I will say for student loans, there are some debt consolidation programs in place for my veterinarians that if you are disabled, there is a 100% chance that you can get all of your student loans wiped away. Just contact us and we can walk you through the process.
Absolutely. So let's talk about some credit myths. This is important, okay? Because nobody taught us about credit. Nobody. When you think about when you were in school, they taught you math, they taught you science, PE even, but they never talked to you about the importance of credit. So 7 to 10 year waiting period. I have people that are saying, Shanti, listen, I've had this debt for 6 years, 9 months. I only got 3 more months. It's going to be deleted anyway. That is a myth. That is false. That is not true. What happens is these debt collection companies are out here to get these coins. They will repurpose your debt, meaning that they will buy that debt. Let's say you owed a bill to Verizon, right? They will go in, they will buy that debt from Verizon, and they will put it back on your credit. And let's say they've tried to collect on it for, let's say, 5 years. Another debt collection company is going to come along, buy that same debt, and put it right back on your credit. And that the same thing is with bankruptcies. Most people feel like bankruptcies will fall off, and that's not true. That's why it is important to have these things removed or deleted. Inquiries. Most people are asking, Can I let the car dealership run my credit? If you have a 420, absolutely not. Because guess what? The car salesman is going to be very motivated. He's going to run your credit through about 200 banks, and then you're going to be looking at 95 inquiries. I had a lady, we had to remove 95 inquiries. It's real out here in these credit streets. So inquiries are absolutely harmful. Do not let anyone run your credit unless you are credit worthy and you are in a place. And again, remember, if you have the credit monitoring service, you can give them the login information. They can look over your credit and they can say, hey, you know what? Yeah, you will get approved. Or you need a little work, come back, right? Can bankruptcy be deleted? Absolutely. Chapter 7, Chapter 13 can definitely be deleted. It doesn't matter if it's discharged, dismissed, or if it's still open. Paying a charge off account removes them. That is a myth. People will say, well, let me just call and just pay it off. Well, guess what? It does not negate the fact that it was once in collections. It does not negate the fact that you paid it late 7 out of 10 times. So, no, just because you pay it off, it does not remove it. Will it help boost your score? Absolutely. But this is something that you want to consider before you just decide to start paying off all of this old debt. Are late payments okay? No, never. They're never okay. Okay, because remember, the higher your score, the greater the impact. We've had people who have had credit scores in the 700s, made one late payment, and it dropped their score down to 600. You don't want to sacrifice that type of movement on your credit, okay? Maxing out your credit cards will harm your credit. They will harm your credit. Anytime you max them out, anytime you go over that 30% that we talked about in the beginning, and we're repeating this because I know that sometimes in order for people to embrace knowledge, repetition is so important. So do not max out your credit cards. They will harm your credit and it will paint a horrible picture to the lender, okay? Because when the lender is looking at your credit and trying to figure out whether or not they want to take a chance and get you involved on getting you approved, then they're going to be looking at that. They're definitely going to be looking at that. So you just want to make sure that while you're in the approval process, that you are thinking about, oh, real quick, while Cliff is coming back in, here's one way that you can boost your credit score today. This is for free. This is one way that you can boost your credit score today, okay? Whatever bill that you have, card note that you have, split it in half. That means if you're paying $400, pay $200 on the first and $200 when it's due. It will trick the FICO scoring system into thinking that you made two payments, and it will boost your score an additional 40 to 80 points. That was free. Cliff, you got it.
Wow. That's something I didn't know. I was sitting there cheering y'all on. I was like, oh, what they're telling is amazing. I go through this with customers all the time. But first of all, I want to say all y'all ladies have been amazing so far, because basically they're getting you set up to come to me to be able to help you get into a loan, because you follow their advice. I tell everybody, when you listen to professionals like these ladies above, you're going to be able to own a home, no problem. So listen, take notes, ask your questions down below, and we're going to be ready to answer them. So I did a little introduction of myself a little bit earlier. So y'all know a little bit about me, a little bit about our company. We strive in having customer satisfaction. As you can see our accolades, we're a top 10 lender throughout the country. We loan in all 50 states. So if you're trying to get a mortgage anywhere, we're going to be able to help you get that started. So let's jump on to the next slide. Now, what I always like to say, and they're a little bit out of order on here, but I like to tell everybody my key to success in buying a house, and I love to call it CIA. That's credit, income, and assets. No background checks, I can promise you that. But bottom line is, those are the main things we're going to be looking at in order to qualify you. The first step is, your credit. And like these ladies said, without credit, you should know where you're at. You should be monitoring it. If your credit score is high enough, that's your first barrier of entry getting into a house. As long as your credit's there, that tells you that we can get you approved for a home. But the next step is your income. How much can you qualify for? And that's what we're going to help you figure out, is your buying power. And your income is also going to determine what kind of programs and other stuff we go on. And then, of course, and that also, your income determines your debt to income ratio on how much you can qualify for. And then, of course, your last is your cash reserves or assets. How much money am I going to need to buy this house? There's all kinds of myths out there where people are talking about you need 20% down. Like the lady said up top, 6 to 8%. In some cases, we get you in with nothing. It is possible. Not every person's the same, but there are programs and ways to get that done. And, getting qualified is pretty easy. We have like on here 2 years of tax returns. Documents are not that much. 2 years of tax returns, 2 check stubs, and 2 months of bank statements. That's it. You're talking about a few pieces of paper and doing a quick 10-minute loan app. Our team's going to be able to tell you what you need to do to get qualified. And the loan process isn't that strenuous. It can actually be done pretty quickly. And it is important to get a full pre-qualification because there's 2 types of approvals out there. There's pre-qualified and there's pre-approved. Now, sometimes people get pre-qualified. They're like, hey, your credit score is high enough and it sounds like you make enough money, but you're just giving verbal information. You always want to make sure that you get a full pre-qualification because a full pre-qualification means a person like me, whether it's me or another company, actually reviews all your documentations. That means they look at your full credit report after you've already checked your credit, you're good. They pull a full report to verify that there's no inaccuracies or any other issues on there. They actually look at your tax returns and your check stubs to verify your exact income that's usable. Because sometimes some income you'll have is not usable and sometimes it is. So you want to make sure that they're validating that and looking at that and then reviewing your assets to come up with a plan to get you in with the least amount of money. But if they do not review those documents, you're not fully qualified. That means you're just pre-qualified. You're not pre-approved. So make sure before you start looking at a house, make sure you get fully qualified. And usually once you get fully qualified, that approval letter is usually good for 3 to 4 months, which gives you plenty of time to go out there with these ladies above right here, get in and find your perfect dream home. So let's talk about what some of the minimum programs and credit scores are. We do loan programs as low as a 600 credit score. These ladies are talking about the 700 club. That's great. Let's get you in the 700s, 800s. But if you're wanting to own a house right now, you really only need a 600 score to get started. Now, of course, the higher the score, the better, because starting out, our veterans, now I think the slide is in wrong, but we'll get that fixed on the next one. You can actually get a VA loan and an FHA loan down to about down to 600 credit scores, so you don't have to have perfect scores and you can get a conventional loan at 620. Now, every person is different based on their credit, their debt to income ratio. You've got multiple options for pre-qualifying and your professional is going to tell you in their opinion, which is the best way to go. Some people are better FHA, some people are better conventional. And if you're a veteran, you better be using your VA loan because those are the best loans out there. So if anybody ever tries to tell you that you're a veteran to use another loan product, they're wrong. We love helping our veterans and we give y'all a great deal. We even waive all our fees for our veterans. So we appreciate the service y'all do. So keep that in mind. And of course, there's USDA out there for, if you're buying out in the country, we can do those ones as well. So it's a great product as well. Now, let's talk about some of the other loan program options. There's limited houses out there, but there's still foreclosures or flooded properties and things like that. Or what if you found this perfect home and it's not fixed up the correct way that you want? Well, you can also nowadays, you can actually buy a house and get a loan and the monies to repair it at the exact same time. So we do offer renovation loans as well. We do those on FHA and conventional where you can go buy the house and say it needed to get fixed up. You needed new carpet, new paint, you needed to get appliances. And there's even some like if I wanted to add a pool at the same time I'm buying that house, there are options for that. So you can upgrade the house while you're purchasing it. So when you go out to that house and it's not quite perfect the way you want, don't worry, you'll be able to get it upgraded if you can qualify for one of our renovation programs. All right. Now, let's talk about navigating the market right now, our post COVID, what's going on right now. It's a little bit different than what the requirements were back in the days. Keep in mind, because of COVID, they want to make sure that, we used to actually go a little bit lower on credit scores than what we do right now. We also allowed you to go a little bit higher in debt ratio than what we do right now. And sometimes, there's just a few extra conditions where you have to make sure that you're working. So some of these guidelines that you're seeing from lender to lender, keep in mind, there are temporary guidelines that do not rule the market forever. And they're actually starting to relax some of them now. So, but one of the things is you always want to make sure that you maintain your updated credit, make sure you're watching it, keep your scores up higher because the higher the better. You want to make sure you keep your debts down. So whenever you apply or you're buying a house, do not go out there and get any new debt because that will affect your debt to income ratio. You go out there and buy that brand new Cadillac, you're not going to be able to get the house that you want. So make sure you keep your debts low. And these temporary guidelines, we're definitely going to be checking your job at the start of the application, throughout the application, and right before closing, they will call your job and verify that you still got a job. So if you've lost your job in the middle of this transaction, tell your lender, we're your friends, we're here to help you. So let us know what's going on. That way we can help you get around it. But definitely, you got to make sure you're maintaining a job all the way through closing, because they will check on the day of closing because of COVID. And then, of course, it affects, how does it affect your rates? Honestly, because of COVID, it has given you tremendous opportunity to get a better house. Because of what's going on with COVID, that's what makes this time the best time more than ever to buy a house, because interest rates have dropped so far because of what's going on in the economy. So it is now a better time ever to buy a house, to refinance, to purchase, because the rates are just so low. So take advantage of it. Rates are low. Get out there, get with your realtor, get pre-qualified, and let's get you in a house. Now let's talk about, we're saying, hey, we got interest rates are low, but what if, Cliff, I don't have a lot of money? You're hearing that myth about 20%, and we're talking about sometimes you got to have 6 to 8%. But what if you don't have that 6 to 8% and you want down payment assistance? We specialize, and that's how we've helped so many families get in homes. We specialize in all the different down payment assistance programs. And I'll go over a couple of them right here. Like, for instance, Seth, which is Southeast Texas Housing, they offer a DPA where you can get between 3 and 7% in assistance. So that's enough to cover your entire down payment in some cases, and all your closing costs, where you can get in with very little, sometimes no money. And some of these programs don't even have to be paid back, so long as you keep the house for at least 3 to 7 years in most cases. And they don't require you to have a 700 score either. Right now, because of COVID, a lot of these programs are requiring you to have a 660 score, but don't worry, the Queens of Credit will be able to get you up, your scores up, if you're not there yet. So we can qualify you for a loan at a 600, but if we want to get you a down payment assistance, we've got to get you up to that 660 minimum score. And it says 600 here. They've changed a little bit, but those guidelines will come back down in the future, so keep an eye out for that. Plus, Seth, there's another program that we offer, an amazing program, and I've been offering to my customers for 13 years now, and it's called the Mortgage Credit Certificate. There is no credit score minimum. It's just some free money that the government's going to give you for rewarding you for buying your house. The government's going to refund 20 to 40% of the interest you pay to your mortgage lender when you buy the house back to you on your tax return each year. So basically, it's going to help you get more money on your tax return, a higher tax refund every year, just because you bought a house. And that's free money, and that's for the life of the mortgage. So if you got a 30-year mortgage, you're going to be able to claim that credit for 30 years. So long as it's your primary home and you're still owning it, you'll be able to claim that credit. So you can imagine, if it's a $2,000 credit over a 30-year time frame, that could be $20,000 to $40,000 in free money, just because you became a homeowner. Last I checked, I don't remember your landlord offering that when you rented his house. He's not going to give any money back at the end of the year. But buying your home, you've got a lower payment, you're getting some free money, so it's amazing. So that's the Seth program. Let's talk about the TDHCA. This is for our teachers, firefighters, police officers, and also there are some people we can put it on that are low income. So these are great programs throughout the state of Texas that offers a little bit lower rate than sometimes the Seth programs, and these monies do not have to be paid back. This one can also be a grant or a second lien, and so it's a great product to get you in with very little money out of pocket. And then, of course, we've got our state option. There's TDHCA, which is another one through the state of Texas. Now, this one is a little different. This one is a loan from the state of Texas that will give you between 3 to 5% in assistance, where they're giving you a loan that you do not have to pay back until you sell that house, or 30 years later at a zero interest. And it's a great product, and it comes with a little bit lower rate because you do have to pay that money back. But over the life of the loan, you're saving that money up. And when you sell the house 30 years from now, that's when you have to pay it back. So the state of Texas will also allow you to get into a house, with just by giving you that money, and you don't have to pay it back till 30 years later. So really good program, and they offer the tax credit as well. So now, not including that one, let's talk about, there's the T-Shack, which we talked about, which are teachers, firefighters. I think that was in there twice. Teachers, firefighters, we talked about that one. Now, there are some that we didn't include in this slide, and I would just briefly mention them. There are other grant programs throughout the state of Texas. So if some of these areas are not in your areas, we do research, and we can help you track down free money for your area. There's bigger grants in there, like City Houston's, Galveston County, Brazoria, that range from $5,000 to $30,000. So there are larger programs that are available as well. So every person's different. It matters on your debt to income ratio, like how much income you make and how much you qualify for. All these programs are truly based on, some of them you have to be a first time home buyer, and some of them you do not need to be. But some of them you have to be a little bit lower income. Some do allow you to have a higher income. So every person's different, but when you work with a qualified professional, they'll be able to tell you exactly what you qualify for. So let's talk about loan affordability. This is my number one factor when it comes into getting someone qualified or not. And this is because this is the number one reason why some people will get what they want or they don't get what they want. And it depends on your income and how much debt you have. Now, basically the way it works is your debt to income ratio is how much debt you have divided by how much money you make. And an easy example of that is if I make $5,000 a month and most lenders want to see you at a 50% debt ratio, sometimes we can go up to 57, but the 50%, that means you can't have more than 2,500 in debts, including your house. So if you have very little debt, then of course you can qualify for more house. If you have a lot of debt, you're going to qualify for less house. So of course, the lower the debt to income ratio you have, the more you can get qualified for as far as programs. And of course, that allows you to get more buying power to get you into your house. All right. So that's important to keep your debts down. Like I said, don't buy that brand new Cadillac right before you're about to look for a new house. All right. Now let's talk about mortgage payment. Now, whenever you're talking to someone, I hate the myths that I see online, and I get them all the time. And I was talking to a customer this morning. They're like, I'm looking at this $500,000 house and I did my mortgage calculator and it's only $2,600 a month. I'm like, no, that number doesn't make any sense. That's not correct, because a lot of times when you're looking online, you're seeing just what your mortgage payment is, and that's what you're paying the bank for the loan. But that doesn't include taxes, insurance, mortgage insurance, HOA dues. So you want to know what your true full payment is. And so whenever you're doing a calculation on a home, you want to know that you can afford it with everything. That, hey, I'm talking about with, so when you talk to a lender and they tell you what a payment is, always ask them, is this we call it the PITI, which is the principal, interest, tax, and insurance. Does that include everything? Because you want to make sure that you don't get a big surprising bill right at the last moment. And that's why it's important to use your agent, especially when they said even going to new builders. So many people use even the new builders just 5%, because one of the big things that I've run across is sometimes when people are getting qualified on a new construction, they're being qualified on just the taxes of the land, not including what the future taxes will be on that property when you buy it. So you want to be very important, like they talked about, knowing your tax rate, knowing what your payment is. So definitely always talk with a professional. You need to know what your full payment is before you make an offer on a house. And so that right there is going to keep you where you need to be. All right. And then let's talk about one of the things which we're going to say is the mortgage insurance. Now, a lot of times people get this one confused with homeowners insurance and private mortgage insurance. Those are two completely different things. Now, you'll have mortgage, there's hazard insurance, which is your insurance on against fire or windstorm. Like if your house gets burned down, who's going to replace it? That's your hazard insurance. And then there's mortgage insurance. Mortgage insurance really is actually, sometimes people think it's a bad thing, but I always say mortgage insurance is a good thing, because it allowed people to be able to start buying houses without having to put 20% down. Because if this was never enacted, most people back in the days before it came out always had to put 20% down, and now you do not. The way mortgage insurance works is you're paying a monthly premium that kind of goes into a pot that in the event of default on your loan, it pays back the mortgage lender a little bit money, pays them some of their losses that they lost for loaning you. And the example I use is like, say, I bought a $200,000 house, and after I moved in, I lost my job or something bad happened, and I can no longer pay it. And then on my way out the door, I kung fu'd up that house, and now it can only sell for $160,000. Well, when the bank forecloses on it and then they go to sell it, they're losing $40,000, and the mortgage insurance kind of protects the lender, which tells them, hey, still loan them people with little to no money down, because we're still protecting our investment. And on conventional loans, in most cases, that's why the 700s club people, 800 scores, they actually get a cheaper mortgage insurance premium than people with lower credit scores. And so FHA is the exact same across the board. It's the same for everybody. But if you've got a high score, you'll be able to qualify for a conventional loan and get a much lower mortgage payment on your house, which then, of course, gives you a higher buying power. So let's make sure we're maintaining your credit and taking care of there. So that's kind of the mortgage insurance. And I know they have a lease purchase program. Y'all want to tell us about that one, ladies?
Hi.
Yes.
Oh, go ahead.
No, we're excited. No, thank you so much. That was so much information. That was wow. It's always a pleasure having you on here because I know they're learning a lot. So thank you, thank you, thank you, thank you, both of you. Thank you for the queens and thank you, Cliff. But yes, let's talk about the lease purchase program. Wanted to touch base on that. So there is options for you for whatever reason. If you do need more time and you don't have it, whether it's credit or whether it's savings, and you do need to move right away, there is options for a lease purchase program where if you're making at least $3,600 a month, with how that process works is that we'll purchase a property for you and then lease it to you until you're in position to buy it back from them. So the benefit of that is that you're already in the home that you want to be in, but you just need a little bit more time to work on credit or their savings. So your minimum credit score for that would be 580. Can't have any active bankruptcies or foreclosures, and a minimum of $4,000 in liquid savings. And the home has to be at least 10 years old, no less than 10 years old. And if you have a positive rental history, of course, you can qualify for the lease purchase program as well. But if you have any questions on that, definitely feel free to give us a call and reach out to us and we can discuss that further as well. All right, live Q&A questions.
Well, I see a couple questions in the
Cliff, there was
comment. I
one
know while we were
question.
talking about. Mhm.
Yes. There was a
Go ahead, lady.
question on here about you servicing Georgia.
Yeah, actually, our company is in all 50 states. I'm not licensed in Georgia, but we work with other professionals around the country. So, of course, if they go to my website and they apply, they're going to go ahead and put them with a Georgia licensed loan officer, and I will be considered the process manager. So I'll be available to answer questions as well. So if you have questions throughout all 50 states, we have professionals that can help you still get a mortgage no matter where it is in the country.
Okay, great. So there's another question on here. If you're divorced and your name was on the deed but not on the note, do you consider yourself a first-time home buyer?
All right. That's the one I get a lot. Now, you're not, if it's state of Texas is a community property state, if your spouse owned a home, and that means you owned a home. So you're not considered a first-time home buyer. Now, they reclassify you as a first-time home buyer. Say, for instance, if y'all did get a divorce, say he got the property, but you got the children, they will actually make that exception and reclassify you as a first-time home buyer. So if that person kept the house and you didn't. But also there are programs that are out there, even if you're not a first-time buyer, you can't get the tax credit, but you can still get down payment assistance. And this is the one I get a lot. Hey, Cliff, I never bought a house, but my mom left me a house. You now own a home. So you're not, I wish they would take away that term first-time buyer. I like to use first-time owner, because if you own a house, if your name has ever been on a deed, you are not considered a first-time home buyer. So you cannot have been on a deed to any property or married to anybody who's owned a property in the last 3 years. So let's say you're also a first-time home buyer if you owned a house 5 years ago, but you sold it 5 years ago and you haven't owned in the last 3 years, you're now reclassified as a first-time buyer and you qualify for all the different programs.
Okay, thank you. Great. Thank you for clarifying that. I tell you, each time we have these events, I'm over here taking notes. Now, I knew what the lender uses in terms of qualifying you for the loan, but I've never heard CIA. Like, I'll never forget that now. Credit, income, and assets. Okay, let's talk
It
about the
always sticks
CIA.
in. Yeah.
So,
Talk about the
yes,
CIA. That's my
yes. Then,
favorite term.
and the queens of credit, you dropped a gem on us with those payments, splitting up your payments here to boost your credit score. Wasn't aware of that one. Definitely, we appreciate that. So if someone wanted to schedule a consultation with anyone that was on the event today, first of all, thank you everyone who participated, sharing this wealth of information. But if they want to get in contact with you, I just want to make sure that I share the contact information. This is a page that gives you some resources over some of the information that we've gone over pertaining to credit, the down payment assistance programs, and then some tools that you can use for budgeting and financing. So feel free to take a screenshot of this page, or if you would like any of this material, you can feel free to message us, to inbox us, and we'll send it to you as well. But in terms of our contact information, please, 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 if you found this information valuable, if you're ready to take the next step, you're ready to move forward and be in your new home for the holidays, or even if it's not for the holidays, right? You just want to put plan in motion so that you can actually start that process. And this is an excellent opportunity for you to do that. You can schedule a consultation with any of us, and the consultation is free, you guys. Let me just throw out that right now. There is no obligation for you or no payment required for you to just have a consultation with us, just to find out where you're at right now and how we can help you and position you for success to be in your new home. So whether it's the Platinum Experience Group, the Queens of Credit, going over your credit situation, or Clifton Saunders with Guaranteed Rate, we're all here for you. You know, your goal is our goal. We want to make this happen for you, but we're on here. Oh, thank you so much. Glenda said, thank you so much. Very informative. Looks like we have another question on here. So how many years do you have to wait after the house is sold to become a
Oh,
first-time
yeah,
home
that one
buyer?
is the 3-year mark. So if you sold it 3 years later, you're considered a first-time home buyer again, and you can take advantage of the tax credit programs or down payment assistance programs. So it's great. And yeah, and definitely another thing out there, and we tell everybody, doesn't matter, you know, where your credit's at, what price range house you are, your person, we're going to help you. So if you think, hey, it's hopeless, I got a low score, give us a call. We're going to help guide you in the right direction. If you think there's not a house out there that you can afford, if you're a little bit lower income, doesn't matter. We're going to help you. Where there's a way, there's, you know, where there's, you know, you got a plan, there's always a way to get it done. And all of us ladies and gentlemen are going to help you do that. So doesn't matter. So
Thank you. Look, Sheila says we want all the perks. Yes, we do. We want them all. If the 700 credit score, we want it all. The low interest rate, the nice house, just bring it all. We're claiming it already. Let's see. We have Angelica. Thank you. I appreciate the information. Thank you for joining us. We know it's beautiful outside today. It's a Saturday. We know you could have been doing something else right now, but the fact that you took the time to spend this with us, we really appreciate that. Shout out to the Queens of Credit. Hold up. I've learned so much. Queens of Credit. I feel somebody getting ready to join the 700 Club just from the gems that you dropped today. Oh, wow. We have someone that says, thank you. Can't wait to get started. Okay. We're definitely look forward to working with you, Lysandra. Reach out to us for sure. We would love to be able to work with you. And is there anything else that you guys wanted to share? I know, Cliff, know this seminar is about home buying. However, with refinances, I know it's a good time to even refinance your existing mortgage right now. But I know there's something that's changing December 1st, the refinance fee. Can you?
well, I know. Okay, so what that is, and they've already kind of instituted that because some people kind of missed out. Fannie Mae and Freddie Mac, we liked, and in the mortgage industry, we're mad at them because we said they just put another tax on it because the government, you know, they lowered interest rates, which made rates drop, which made it better to refinance. And since now the rates are lower, they decided to go ahead and add an extra 0.5% G fee, which raised the rates back up. So it's not going to the banks, it's not going to the government. They're just making a little bit more profit. So it kind of, you know, we can't get around that, but guess what? It's still a great time to refinance because rates are so low. And even if you think, you know, especially if you're ever thinking about, hey, I'm going to turn my house into a rental property 6 months, a year from now. Hey, anybody who owns a house, take advantage of refinancing now, because if you're wanting to invest in real estate, the lower you get your payment now, you'll be able to rent those properties out and have a larger cash flow, and you can qualify for more house. The only time I don't recommend someone trying to do a refinance is if you plan on selling within the next 2 years, because the cost of refinancing, you know, it's just not worth it. Don't waste your time on it. Save your money. If someone tries to refinance you and you know you're selling in 6 months, hey, that's just a waste of your money. Don't do it. But definitely, if you've got, you know, with everybody, if you bought a house more than a year ago, hey, give us a call and get started, because rates are way lower, by over 1% lower than what it was a year ago. And years ago, I have some people saving 2-3%. It's insane. So
Wow.
it's a great opportunity to save. I think the most I've had a person drop their payment was $500 per month.
That's awesome.
And it was on a veteran. We did the interest rate reduction loan for VAs. They can come in. There's no appraisal required. We lower their rate. We refinance them, roll in all closing costs and nothing, and they're just dropping their interest rate, getting a lower payment. It's amazing for those. So
That reminds me, I have someone to send to you that's a veteron too, Cliff. So I'll get with you after this. So we have a question for the Queens of Credit. They said, how many points again for those car payments?
Oh, yeah, that's important. Okay. Anywhere from 40 to 120 points. Because remember, the greater or the higher your score, the greater the impact. So, you know, if if you're like at a 550 and you miss a late payment, it probably wouldn't drop you 100 points, but it will drop you a lot. And again, it just goes back to sacrificing and discipline. And so the other tip that I did want to give is that old addresses, when you remove those, that'll help boost your score an additional 30 to
Really?
50 points also. So you just want to make sure, yeah, yeah, because what happens is that when you have someone, maybe they've lived in an apartment and somebody else lived in that apartment, merges.
Oh,
On that, here we go. The information tri merges, and so that's why studies have proven that 80% of the information being reported sometimes on your credit is inaccurate. So when you start to remove old addresses, it'll do two things. It'll actually help you in your job search because it'll paint a picture of stability because they won't have anything else really unless what you put. The other thing is that when you remove those old addresses, it'll help boost your score 40 points because those count towards your scoring into the FICO scoring system.
okay, awesome, awesome. See, this is just a snippet of what you get, and this is why you guys want to schedule these consultations. We can't give you everything on the Facebook Live, but we definitely wanted to, share some information just to kind of get you started with the process. Hopefully, we'll have a question on here. I'm also learning the FICO is different from the score needed to purchase a home. Yeah, so there are two different types of scores. You have your Vantage score, which is typically used. Well, actually, let me not answer a credit question. I'm gonna give it to the queens of credit. You guys can handle it.
Actually, that's going to be a Cliff question because
I got it.
we'll say 620 and Cliff will be like, no, 660.
I get this all the time. Like what y'all said in y'all's thing, don't use Credit Karma. Credit Karma, I really don't care about it too much, but I mean, it's okay to monitor at times, but you got to realize that there are different credit scoring models. Like there's a FICO 8 score, which is what Credit Karma uses, and that's primarily used for credit cards or car notes. There's actually a mortgage FICO, there's a car FICO, there's a credit FICO. My favorite monitoring program is Experian.com because that actually gives you your mortgage, your car, your credit card, and everything else. But the main reason is I believe the FICO 8 score is on a 950 scale, but the FICO 2 score, which we use as a mortgage guy, is on an 850 scale. So normally whenever you're looking at that FICO 8 score, it's generally about 30 to 40 points higher than what I'm going to pull as a FICO 2 score. So I don't say that it's a bad thing as long as you know there's a difference. So don't call me up and say, hey, Cliff, Credit Karma has me at a 600. I'm ready to go. I'm going to be pulling a 560, 570. So if you're using Credit Karma and you want to know if you're close enough to qualifying, generally I always say you need to try to be at least 640 to 650 in Credit Karma. Then when I pull your credit, I'm going to pull above a 600 score. And so just kind of know that that's where the differences lie, that it's just a different scoring model. Not that it's bad or wrong, it's just a different model. And so we are going to pull the FICO 2, and Experian.com has the most accurate one. It pulls the exact one I will generally pull for Experian when they give you the FICO 2 score in most cases. So it's really very accurate. The Credit Karma, like I said, it's always going to be higher. And that's the main difference between the two.
Okay, thank you, thank you. So look, somebody said I'm calling Cliff. Someone had a question. Do you recommend using Credit Strong or Self Lender to help build the score?
Those are actually both very good. They will help with the payment history. They will also help boost your credit score anywhere between 30 to 60 points. It really just depends. And it really helps people that have no credit. So like you have some people that have absolutely no credit and they may not get approved for a primary trade line or a primary credit card, but Self Lender, Credit Strong, and then there's a couple of other ones that are out there that are great for adding positive credit. So yes, that's a great question, and yeah, it'll definitely help.
That's awesome. I haven't heard of those, so that's good. But I like one I do recommend also with Experian.com when you sign up for the credit line, they actually do their Experian Boost, where you can add your utilities and stuff by linking with your bank account, so it knows when you pay your cell phone bill, your light bill, your water bill, and it actually adds it to your credit. And I've had people boost their score a good chunk to get their scores up just by doing that alone as well.
Yeah, so I'm familiar with Self-Lender, not with Credit Strong, but there's so many resources out there. And I just wanted to go back to this page, the credit section at the top. It has the annualcreditreport.com, so you can look and see what's on your credit report. You actually get a free report every week through April 2021. That's part of the CARES Act. Just to allow you to see what's on your credit report. So it's not going to give you the score, but you can see what's on there. But then we also have for the mortgage FICO score, myfico.com is another good resource that you can use. They have an app, or you can go to the website, and like Cliff mentioned, it'll show you your different types of FICO scores because they use different models. So you can look at that and see your auto score, your insurance score. You can see your actual mortgage score because that's what the lenders are going to use, and they have different variations of that mortgage score. So you can make sure that you're actually looking at the right score to make sure that you're on tracks to be able to purchase your home. And there's so many different options, you guys. That's why we highly recommend, giving us a call, because everyone's situation is unique, is different, right? We can't just give you a solution and it's going to work, for the next person as well. We really want to understand what your situation is so that we can recommend the best solution, the best options for you, help put you on that path to home ownership. Some people I've seen within 30 days, they've been able to increase their credit score. Just by tweaking a couple of things. Maybe it's utilization, paying some things down and things of that nature. But we have to be able to speak to you to see what your situation is so we can understand it, and so that we can, make some recommendations and give you an action plan to help you with the next steps. I know we're going over our time. We want to be respectful here. Someone asked, will the video be available later for review? It will be on the page. So you can always access this information and go back and replay it if you need to in the future. Did someone else have a comment?
Yes, I was going to speak to what you just said, Vanessa, about making, it's not something that everyone can use across the board. So one thing that you get with Queens of Credit, everything is tailor made. Yes, we have certain things on the website, but when you call in, we look at your situation, and it might not need X, Y, and Z. You might not need the same as everyone else. So we do tailor our packages to our customers and their needs. Also, they will receive a updated specialist every 30 to 45 days to update them on what's been deleted and what the next step is. So we really hear the voice of our clients and help them walk them through the process.
Okay, awesome. We appreciate that. And we definitely want to be respectful of you guys' time. Does anyone else have any more questions that we can answer for you before we go ahead and close it out? Why do you have to open 5 accounts? Wait a minute. Information was very informative. Why do you have to open 5 accounts?
Now I can kind of answer on that one. Now, I don't know where they heard the 5 accounts. What she was saying is, different version of accounts. It's good to have a revolving account. It's good to have an installment account, but you don't necessarily have to have 5 accounts. Like you will, and I don't know if maybe that came from somebody else, but you will see some lenders will actually count trade lines. Like you've got to have so many trade lines. We don't do that. If your score is high enough, I've had people where they'll come in and they've got one credit card they've had for 6 months and they've got a credit score. I can get them approved. So we're not going to count your trade lines. So there isn't a specific number of trade lines you need to have, but it does affect how high your scores can go by having a good mix of accounts. And the more positive accounts you have, of course, the better your score is going to be.
Thank you. And if you guys aren't doing so already, go ahead and like Platinum Experience Group, like the Queens of Credit, join their group. These ladies go live. So 7, 8 o'clock at night, they're going to pop up and they're giving you tips. I'm like, they're going all the way in. So join their group, Clifton Saunders, Guaranteed Rate. Go ahead and connect with them now online. These are our business partners for a reason, because we really respect what it is that they do, the value they add, the quality of their service. We're all about putting our customers first. We didn't mention this up front, but we really focus on, love God, love people, live on purpose. So we really are passionate about everything that we do. We don't just see this as a transaction. Our goal is to become your realtor for life, whether you're looking to move here in Texas or, domestic or internationally. We want to be your one-stop shop when it comes to real estate, and for you to really trust us. And we know that we have to earn your business in order to do that. So that's why we partner with the best of the best. So definitely, if you have any questions, reach out to us. I've given you guys our contact information so that you can schedule consultations if you're interested. And again, thank you all for your time. Do you guys want to have any closing remarks before we close it out?
Just have a
None?
blessed weekend, everyone. Have fun. Go out there and enjoy this beautiful day.
Yes. Thank you guys so much. We appreciate your time. Have a good weekend. Bye.